So guys, it is Tuesday, the 11th of August. And well, today we're going to get into, of course, the markets and a couple other things, but there's been some questions that have come up recently that I wanted to clarify a little bit more. But first and foremost, back to the email. When you get done, let's go back to the email. Bottom of it, it'll reference the QJO Initiative. Subscribe to that if you haven't already. Let me just tell you a little bit about what we're doing there. I've got business leaders we're bringing in, those who listen to podcasts, those who watch YouTube shows about business and about entrepreneurship and how people are being successful and all those things. We tend to gravitate towards, the ridiculously successful folks, the Bezoses of the world and the moguls that are out there. Well, we're looking to try and highlight those who are still on their journey. So what we've got is a group of guys that we're getting together and bringing in business leaders from all over the country that we know. And we're spending a day with them. This isn't just something we're getting on a quick Zoom call and talk to them, although that has some good merit as well. We want to get to know who it is we're talking to. I want to know a lot more of the background, have more of a deeper discussion while we're rock crawling in a very, very adverse environment, if you will. Something's going to make that passenger get a little bit freaked out. Also, we're going to spend some trigger time doing some long range shooting with some highly trained people, potentially some bow fishing, some fly fishing. In fact, eventually some stuff here. This is a shot of a cove I was hunting in Alaska about a year and a half ago. I want to spend that time with them in a place that they're unfamiliar with, so we really get to know who they are. So we have that conversation around the fire that night. We can hopefully get deeper conversation than what you're going to get in those surface triumphs that people like to talk about in most podcasts. I can talk about where they won. We want to talk about where they're getting their ass kicked. I want to talk about the worst thing that's ever happened to end up having the best result that could have been. I've had those experiences myself. Those things have really just catapulted me because of how you deal with the adversity. So subscribe to it. Check it out. Let's get some numbers on there because we've got a lot of film in the can. We're going to start punching out here real soon. Into the markets. Markets actually are coming down the bottom end of the channel, the bottom side of the channels here. When we're looking at what's going on today in the 3.5, we're going to get into the 4 and the 3 and just see what those are doing. But we've come off of the highs of where we've peaked out at. Now, again, the rates are going to be still very similar to where we started at, but they're not going to change a ton as far as the rate is concerned. You might see some change in the costs. There may be some increase in how what you have to pay to get the exact same rate. In fact, I'm going to pull up a article on Mortgage News Daily that references the same. So, just know that even though the market swings around a little bit, I think we talked about in the past how when you see those adjustments down as far as what the market is, that means there's going to be some additional costs. 12 basis points. So right now we're down 15 basis points according to what we're seeing on the 2.5% coupon. So that means that same rate that one could have gotten yesterday is going to cost them 0.125% for that. Now the 4%, when you're talking about those rates above 4%, you're looking, it's a little bit more steady. We haven't seen as much of a decline as what we did just there in the 3.5. So just know that the rates are still going to be the approximates that I've been tossing out there. We're not going to see a lot of variant in the specific rate itself. Now we're going to move on over to Mortgage News Daily and what they had to say, which I thought was really interesting, that they're referencing how the headline rates are not necessarily exactly what you're going to see out there. You're going to see you're going to see a little bit of variant from whoever it is you're talking with, right? So the news loves to report stuff that's going to get attention. Attention is rates are at the all-time lows, which they are, right? But if you want to look at the absolute lowest ever, it's really not there. It's close. So this was August 6th. This is a few days ago. So they're referencing actually back when rates were actually a little bit lower than they are today, or at least the cost for the rate was lower than it is today. And this particular author, Matthew Graham, is referencing how, what you're seeing out there, even though it's publicized by the news, is not or other people that are putting the information out there, is not necessarily exactly what is the absolute lowest that's available. So another thing that I found was very interesting. Now, if you scroll down on that particular article, you're going to see this guy, Ted Rude, over at the Federal Savings Bank. I found his comment rather interesting. He said, "We may not be at all-time lows, but we are danged close. Writing 30-year loans with interest rate in the twos is a no-brainer for any qualified client, particularly those with larger loan sizes. If you owe $50,000, benefits refinancing may not surpass the cost. Most folks don't know, but the cost of a $500,000 refi is not much higher than the cost of a $50,000 refi. Added a little bit in there, at least in states that don't have on estate and real estate taxes on their refinances. So what I thought was really, really a good reason to show that is because I've had recent conversations come up. I've had many people calling about trying to refinance and get that rate a little bit lower, and they've got loans that they have, $50,000 and $60,000 balances. One of the things that they're really, really frustrated with is the cost structure is like that's 10% of the loan. We can't go into percentages. The cost to do the job still is the same, whether it's $500,000, $1 million, 70,000, 50,000. It's the same amount of work. It's the same amount of paperwork, the same amount of hours that a person has to put in, sometimes more on these lower loan sizes. Because now we're dealing with cost to loan size ratio regulations. We're dealing with lower income housing regulation. It's a lot tougher. And now because of that, the cost to do it goes up. It gets increasingly expensive. As a result of that, those who are trying to refinance a $50,000 loan or $60,000 loan, yeah, you may drop a full percentage point. When you think about that percentage point on that loan size, maybe $30 a month, maybe. And then when you consider the cost that you have to put in, $2,000, $3,000, possibly $4,000 to make it happen, is it worth it? It's not. That's why I've always preached, and I'll continue to preach. If you're going to do cash out, it makes a lot of sense because you can take that capital that your business has created with the equity in that home and the pay down over time that your tenant paid, not you. You didn't accelerate the payment, I hope. And if that's the case, you can take that cash out, buy more assets, expand your ownership, expand your holdings, right? But if you're just refinancing for the sake of rate, you're throwing money down the tube. You really are. Now, I know I get there's a little bit of gap in cash flow, but when you consider the loss in your tax deduction from the higher interest rate that your tenant paid anyway, you're not getting as much as you think. Really, really think about that before you start jumping into spending the amount of money it takes to refinance. Again, $50,000 loan is the same as a $500,000 loan as far as costs. There might be a few differences as far as, the taxes and things like that. When it talks about the lender and the title company and those things, it's very close. And the appraisal sometimes, depending upon your market. I mean, heck, I was looking at some, $400,000 appraisals on a 1,500 square foot house, where at another market has a 120,000 square foot, $120,000 house. So appraisers are doing the exact same amount of walking around regardless of whatever the price is of the home. So remember that when you're considering the refinance. Focus your time, your energy on the growth of your business, not trying to squeeze that extra penny out. That's really, you're throwing dollars to squeeze the pennies. So give those things thoughts before you start digging into whether or not you should focus energy on those refis just for the rate. It's very tempting right now, but it may not be your best bet. Definitely want to think about it in advance. Appreciate you guys watching and subscribing. Going in there, subscribe, get it done, push that button. The Quit Jerking Off Initiative. Appreciate you.